Hi, it's Anthony Meisner with Land Title. I came to bring you your update for Greater Metro Denver today. Let's dive right into the details. When we look back at April and what happened, I think you can really see the most important thing is the rise in inventory. Our active units of inventory in the month of April had already hit the peak from where we were in September last year. That is a 57% rise year over year. So astronomical amount more inventory in the marketplace. Head and shoulders the most important. The other thing I think is worth keeping in mind, prices have started to slide down just a little bit with that rise in inventory. Under contract numbers continue to stay where they were. So it's not for a lack of buyers out in the marketplace. It truly is an amount of sellers entering the marketplace we haven't seen in a long time. So let's kind of look into that and see what's really important, right? I mean, if you look at active units, 11,000 on the market right now, that huge rise is important to see. But where's it taking place? Normally I look at this and I'm like, man, it's all over the board. Today, it's absolutely weighted to Jefferson County with a 85% rise in inventory. Broomfield being the lowest at a 38% inventory. So are they all headed in the same direction? Absolutely. Most of these marketplaces, 50% or more increase in inventory outside of those two. Now, new listings, right? This is the amount of seller appetite we have month by month. And the crazy thing to see right now is we have over 1,000 more listings we had this time last year. So that year over year change is like 18% up. So it is already stacking up because we just don't have the buyers to compensate for the amount of new listings coming on the marketplace. Broomfield and Elbert County were up over 30% year over year. So huge numbers in some of these counties. I think that's really important to see. And I guess what does that mean? What it really means to your buyers and sellers, it means that we're at 3.2 months of inventory, which just means we're really around a balanced market. It's going to feel about the same thing it did in the third quarter last year. So it's going to feel a little bit more competitive out there for your sellers. If you have a buyer, they have a lot more to pick from. They have a lot more to choose from. They can come in and negotiate a little bit harder. So I think that's really important to remember. 3 months of inventory. We're really talking 3 to 4 months is kind of that balance range where buyers and sellers are on even footing. And we haven't felt that or seen that in this marketplace in a long time. You can see on the graph here, we're talking at least 4 years ago, we still didn't have anywhere near that amount of inventory. And when I look back at historical data across Colorado, we're talking 2012. So there's a lot of inventory. Now, days in MLS should take a little bit longer to sell things, right? I mean, you got more inventory to look at. It's going to take a little bit longer to go under contract. We went from 31 to 39 days. So 39 days in MLS is about 26% above where it was before, but it's only 8 days. So it's another week to go under contract on average. Most of the markets are almost the same, right? They're all on that, 35 to 40 range. Douglas County was the highest at 46, but we're all kind of right in that same vein where it's just taking a little bit longer to sell everything. And that's totally okay, right? We don't need to feel like our hair's on fire in this marketplace. It just means that, we need to set some proper expectations with our sellers if it is going to take a little bit longer to get stuff sold. Now, if we look by price range, this is where you can see some of the dynamic shift in the marketplace. 3+ million, we're down 38% from this time last year, but we don't sell a ton above 3+ million. Now, where we are seeing a lot more sales take place is anywhere between about that 800,000 and the 3 million mark. So the higher end price points are moving a little bit better than they did last year. That's great to see. The bulk of the market is about the same as where it was last year, 4% up from 500 to 800,000. And if you're under 400,000, they're definitely selling a little bit faster too in detached. So what's that mean on the flip side, right? Because those percentage changes are a lot better than what the average market is. What it means is the attached market is really feeling the hurt, right? We are seeing a very dynamic difference between detached, that gold standard in real estate, single family home, and those condo townhouses. And these are down substantially, right? I mean, if you look across the board, we're talking 20 to 30% in almost every single price range, with inventory rising. On the other side, you look at the actives, and year over year, I mean, we're talking 70, 80% out of a lot of these markets. Outside of the luxury market really hasn't seen a huge swing in inventory, but it is, 10% or more over 1 million. So that is kind of, fascinating to watch, but we're going to continue to see this trend for a while. You can definitely feel it in the marketplace. We've been watching it for the last couple of years. If you look at this is days on market and month supply of inventory by price range for detached single family. like I was telling you about inventory, 3+ months of inventory is that balanced-ish market, right? So 800 to 2 million, you're feeling that 3 to 4 months of inventory. It should feel fairly balanced for buyer and seller on even footing. If you're under 800,000, it really still is a seller's market. There's a lot going on there. You might even feel like, you get a couple of offers if you've been on the market for that 38 days where it takes to go under contract. And, it's fairly competitive. Really good property, you're going to move fairly quickly. You get up into the luxury price points, 2 million, 3 million, talking major buyers markets at this point, right? 10+ months of inventory over 3+ million. Now, what does that really mean as far as how fast they're going to move? The best homes are still selling quick. You can see average sales price or average priced homes are moving from 1 to 2 million in 27 days. So that tells us realistic pricing, having a good product, doing that stuff to button it up is really going to make the difference to get it sold on the other end. There are buyers looking. There's just a lot of competition out there. Now, if you look at it in the attached vein, this is where you look under 600,000, 4 months of inventory already, 4.5 months of inventory. This is already very competitive. It's already a buyer's market in those price ranges, and it's going to get more as you go higher, right? So we get to 600,000, way up over into the multiple millions. All that luxury attached product, way, way more competition than we've seen in a while. 6.5 months of inventory is going to feel like a strong buyer's market, right? So it is going to sell, right? Stuff's definitely selling if it's priced appropriately. You can see it over there. It's still selling in 30, 40 days, but it just is sitting a long time if it is not in that bucket. Now, okay, let's talk about sales price. I said that prices were slipping a little bit. You can see in the detached single family home market year over year, we're down by about 1.8%. A slight change. That's a $15,000 change based over this time last year. Now, if we look at the attached market, this is where you're really feeling the change. You can see as you looked at the trend over the last couple of years, bouncing around a little bit in 2022 and 2023. And then we really got into this, there's a lot of inventory and a little bit of a steady decline in prices in this marketplace. We're feeling it now, 6.5% year over year change in the attached market. And you don't see this changing anytime soon because until we get lower interest rates, you can get more buyers to come off the sidelines. It's going to continue down this path for now because HOAs and all the increases that are creating the average monthly payment to change is really affecting that total value of the house. If you need a good video to take out there or something to share with somebody, this is always a good one when people ask, how's the market, right? That common question we get. You can see year over year, 4% increase in solds. Everything's looking pretty good. We're trending a little bit above where we were this time last year, but year to date, we're only about 1% up. So very similar to where we were a year ago. The last one that I wanted to talk to you sale price. So really, what's it feel like when you're selling a home, right? You should really expect 99.5% listed sale price when you're selling in the average range, right? And if you look at the different counties, you can see them down there, 99.5% in most of them, but some places like Broomfield, even though they had less inventory, it's moving faster, only 98.8%. Elbert County, 98.4%, a little bit more competitive for sellers out there. But if you look by price range, that's the one that I think is the most important. You can see the meat and potatoes of the market is pretty close to 100% because this is peak buyer season, right? When we look at peak buyer season, that's when the most buyers are out there and there's not a ton of inventory coming on yet, right? Because sellers tend to sell when it's most convenient and listing season is March through October. So the buyers peak early and then here we are, right? So you see this listed sale price kind of coming in there. This is still a great market, right? This is a great time to sell, 99.5%, but it does not include concessions or price drops. So if you're seeing some of that take place in the marketplace, understand that this data isn't including that. And it does affect things, right? But we just don't have a way to measure that. So if you have any other questions, concerns, please feel free to reach out to me. If you have any other submarkets you would like information for, I'm always happy to help. This is Anthony at Land Title. Catch you soon. Bye.